Hey there, everyone. It's fantastic to have you joining me today. We're diving into a really intriguing topic that could have profound implications on your financial decisions. The US dollar keeps dropping. Now, I know some of you might be thinking, what does this mean for me? Well, that's exactly what we're going to explore together. The US dollar has long been a cornerstone of global finance, the go-to currency when trading and investing. But lately, there's been a noticeable decline, and this raises questions about market stability, investment strategies, and even everyday buying power. Let's start with a basic understanding. Why is the dollar dropping? Various factors play into this. Interest rates, inflation, and global market sentiment all contribute to the dollar's strength or weakness. Picture this: as investors turn to equities and show optimism in the stock market, there's a simultaneous feeling of negativity towards the dollar. It's a rather intriguing dance that can influence your portfolio significantly. Now, take a moment to consider your own experiences. Have you ever felt the pinch when traveling abroad because the dollar wasn't going as far as it used to? Or perhaps you've noticed the prices at your local grocery store creeping up? That's the dollar at work, or rather, the implications of it not performing as well. What do you think is causing this shift? Is it simply complacency, as some analysts suggest? While optimism in equities is beneficial, relying solely on that while the dollar falters can be risky. The balance of confidence and caution is critical. So, I encourage you to think about your investment strategies while we discuss this. Let's engage here. If you're feeling anxious or puzzled about the dollar's decline, drop a comment below. I'd love to hear your thoughts or questions as we move forward in our discussion. So why does this matter in a practical sense? If you're an investor, diversifying your portfolio could become increasingly important as the dollar declines against other currencies. Think about international stocks and commodities that might offer more stability or potential for growth during this period. Now, I want to pivot to how this affects the average consumer. Rising costs in goods, travel, and living expenses can stem from a declining dollar. It's essential to stay informed about these shifts as they affect your daily life and purchasing power. Consider keeping an eye on prices and perhaps reevaluating your budget to adapt to these changes. But let's not forget the global perspective. A weaker dollar could present opportunities for international markets, opening the door for overseas investments or travel that become more affordable. Are any of you considering investing in foreign currencies or traveling abroad? It could be an ideal time to take advantage. As we sum this up, remember, the dollar's potential drop doesn't solely represent negativity. It invites opportunities for savvy investors and everyday consumers alike. Keep watching, keep asking questions, and let's navigate this complex financial landscape together. Make sure to subscribe to our YouTube channel so you don't miss out on any of our upcoming discussions about finance and investing. There's a lot to unpack. Thank you for tuning in today. I hope this conversation has sparked your interest in the dynamics of the US dollar and its broader implications. Let's stay informed and engaged with these developments, and I can't wait to see how everyone navigates this fascinating landscape. Until next time.